to run us through more on that. Vahista.
Hi Nigel, thanks for that. Well, you're right. Harsha Engineers International is coming up with an IPO and the issue size is at 755 crore, of which the fresh issue is of 455 crores and the remaining 300 crores is an offer for sale. The issue opens today and ends on the 16th of September. The price band is 314 to 330 rupees. Now this is, like you mentioned, the largest manufacturer of precision bearing cages in terms of revenue in the organized sector in India. Also, we need to remember that bearings have multiple end-user industries like automotive, railways, aviation, construction, mining, etc. The company has its production facilities in Ahmedabad, in Romania and one in China. In terms of market share, 50 to 60% in the Indian bearing cages market and 6.5% of the global organized bearing cages. Also, the global bearing cages opportunity is at present at $5 billion and is expected to double by 2029. The company has two primary business segments. One is the engineering, which contributes 94% of their revenues, while solar EPC business is a smaller proportion of approximately 6% revenues. It has a diversified revenue breakup for the engineering business from Europe, India, China, America and the others, and the proceeds from the IPO is expected to be utilized for repayment of debt, for funding their capex, and used for infrastructure repairs. Now we also, right, back to you.
All right, Vaista, thanks a lot for that. 270 crore worth debt repayment by this IPO that would make the company virtually debt-free. But to discuss this and more, we do have with us the management chairman, Rajendra Shah, and CEO Vishal Rangwala join in to discuss what lies ahead. Thanks a lot, gentlemen, for joining in, and also welcome to the capital markets. Mr. Shah, I'd like to ask you first, you become debt-free with this debt repayment, but importantly, can you give us a breakup of your engineering revenue? We understand 94% comes in from the engineering business, but how much of that is autos, non-autos? What are the other sectors? Can you give us the sectoral breakup?
Good morning and thank you. It will be slightly difficult because we are making the bearings and we are supplying to our customers. So all the time we don't know this bearing is going to be used where. But approximately I can say more than 60% is our industrial bearing and 40% is the automotive bearings. Okay. And in industrial bearing, is one of the major areas is the railway, off-highway, railway, aviation, then windmill. Windmill is also a very big sector for us.
Got it. Hi, Mr. Shah, as well as Mr. Rangwala. Thanks so much for joining in. Well, the last year, you did a good revenue, big number, close to around 1,300 crores odd. Could you give us a rough number? What was that capacity utilization that you functioned at? I want to understand, with your current investment, your current gross block, what are the peak revenue numbers that you can hit?
So last year we did about 60 to 65% utilization on an average basis. Having said that, we have a lot of product lines. Some product lines were much higher utilized, some were lower. And ultimately it is difficult to go beyond 80% utilization for us. Okay. So ultimately we can grow from here without a significant capacity investment, but we will have to invest in some pockets, looking at a product and other things, depending on how are the demands going. So, but yeah.
So fair to say that you can do 1,800 crores comfortably without adding any more capacity. Just going by the numbers that you're talking about. But you're going to be spending some money on some capex, right? I think 80 to around 100 crores odd. So what is the typical asset turn in the business?
Our typical asset turn is about 1:2 to 2.5, around in that range.
And the capex and the amount of money you're spending is 100 crores, is that correct?
About 78 crores odd money on the capex is planned for next year or so.
So another 160 crores is what you can do by way of asset turn on that new capex. So if I put it together, at peak levels, you can do close to around 2,000 crores of revenues post this capex coming on stream. Are we getting that correct?
Correct.
All right, take that point, Mr. Rangwala. Just wanted to understand, of the 40% that you get from autos, how much of that is actually platform agnostic? Because EVs are rising. So do you have any products for the EV space as well? And have you added
Yeah.
any clients in the EV space in the last couple of years?
Yeah, so through our customer, we supply to EV market. We are supplier to our customer in US, who in turn supply to Tesla. Similarly, in India, we supply to our customer, who in turn supply to Tata Motors in the EV segment. As such, for us, two-wheeler, three-wheeler, and passenger vehicle is a very small market, even within automotive, because big chunk of our market is, a lot of CV, lot of off-highway, and all those products. So my guesstimate is that it should be in about single-digit revenue for us when it comes to two-wheeler, three-wheeler PV segment. So for us, a very limited impact if I look at it on a negative
Right.
side.
No, because what we understand is that from your clients, a large part is Timken, and we do have a lot of them coming in, SKF as well. And they're also your competition. So does that not put you at a risk when your client and your competition are the same?
No, actually, we don't compete with our customer. We actually supply them a specific product called bearing cages, which goes into bearing. We don't supply these product or any other product which goes into directly OEM for most part. And so it doesn't make us a competition. And actually, we enjoy very long-term, strong relationship with our customer base. We collaborate with them on a lot of technical projects, as well as support their new product needs, and we are a critical part of their supply chain.
Okay, the solar EPC business, now small but growing rapidly. Out of this 2,000 crore revenue mix potential, we're keeping it safe. The regulator is looking as well, so you don't want you all to get into trouble. But out of this 2,000 crores, what is the potential revenues that the solar EPC business can generate?
See, solar as a potential is very, very large,
Yes.
But it is a very competitive business with, a lot of interest from, multiple parties, and a very difficult business also. So right now we are in a transition where we are restructuring this business to focus on a narrow segment and to be very profitable within this business. So that is our focus. Difficult to actually say what would be, how we will grow in that, because our short-term focus is, stabilize and put it on a good
Has your
ground.
solar
So that
business broken even, Mr. Rangwala?
yeah, we are very hopeful that this year it will break even.
And
Last
this
year
year
it
it
did
would
make a
contribute
loss.
how much to your revenues, roughly?
We are estimating about 80 to 100 crore revenue contribution.
Okay, 80 to 100 crores. And, 65% of your revenues come from exports. Just wanted to understand, about 40% coming in from Europe. There is a fair amount of problem in terms of macro issues in the European region. Do you think that could be a near-term concern for you? Are those clauses built in your clients? Because, I mean, top 5 clients account for 70% of your revenues. How much of them are Europe-based? Could you give us a sense of what those guys are saying, at least for this year?
Yeah, so right now we are not seeing any major impact on our demand cycle, but this situation is still developing, so we could potentially see some challenges. From an energy point of view, we are part of this Europe revenue. A small portion of it is manufactured in Europe and supplied into Europe, and so there could be that impact on the energy front there. Having said that, we are aggressively working with our customer to mitigate that. Second, actually, we see a lot of potential upside because we see that the wind market could improve based on European energy crisis. They continue to invest more in wind side, and we have a big segment of wind over there. And the third aspect is that we are supplying a lot of products from India, so it is possible that we will get more opportunities in India based on this crisis. So that's how we look at it.
Very quickly, out of the money that you're raising, 270 crores will be debt repayment, right?
Correct.
So you'll become debt-free then?
Almost debt-free in India. We would carry some debt outside India.
Okay. And on this 270 crores, what was your rough borrowing cost, in the past year? Because I'm just trying to calculate what is the interest savings.
You can consider roughly about 12 crore or interest saving. It is an approximate number right now.
Rough 12 crores per annum is what you'll save because of the debt repayment. Well, it's been good speaking to you, Mr. Shah, as well as Mr. Rangwala. We have had the trailer. Now the issue goes through. And when you list, well, we could get some more concrete guidance from all of you all. Looking forward to chatting up with you all rather soon and wishing you all the best. For the time being, though, we'll slip into a short break. Come back. We'll check on the markets. We'll get a technical check. We'll also focus on a couple of stocks that are moving around.